Have you ever felt that the market is out to get you? That somehow, no matter how well you plan your trades, the outcome always feels like a game of luck? You're not alone. In The Disciplined Trader, Mark Douglas uncovers a hard truth that many traders discover only after burning through their capital. That your biggest challenge in trading is not the market, it's your own mind. The market isn't your enemy. It's just a mirror, constantly reflecting your inner thoughts, beliefs, and fears. The reason you panic during a sudden drop or hesitate when your setup is screaming by isn't because of the chart or the candle. It's because deep inside you haven't trained your mind to act with discipline and trust. Douglas explains that trading success is 80% psychological. Think about that. You can have the best indicators, the most advanced charting software, and years of technical analysis under your belt. But if you still hesitate to cut a loss or jump into revenge trades after being wrong, then none of that knowledge will save you. The reality is, most of us come into trading with a mindset shaped by school, jobs, and social rules. We were taught to avoid mistakes, to fear failure, and to seek approval. But in trading, there's no teacher to praise you for a good entry. There's no boss telling you what to do. And there's certainly no reward for trying hard. The market doesn't care about your effort. It only responds to your ability to manage risk and remain calm. That's a huge shift, and it's why so many people fail. For example, imagine a trader named Ramesh. He's just starting out and he reads about a breakout strategy online. He tries it. It works once. It works twice. On the third time, the breakout fails and he loses 5,000 rupees. Frustrated, he immediately places another trade to get it back. This time, he loses 10,000 rupees. Now panic sets in. He blames the market, the news, the strategy, but never once stops to ask, was I emotionally prepared for this? Did I have rules for how much to risk? Was I following my plan or just reacting? This is exactly what Mark Douglas means when he says the problem isn't strategy, it's psychology. In his book, he shares his own painful story. He lost his house, car, everything. Not because he didn't know how to trade, but because his mind wasn't ready to accept risk, loss, and uncertainty. He, like many of us, thought the market could be conquered with more knowledge. But knowledge without emotional control is like a loaded weapon in the hands of a child. Dangerous. One of the most powerful ideas Douglas shares is this: you don't need to know what will happen next. Trading isn't about being right. It's about managing your behavior when things go wrong. Douglas lists 10 psychological mistakes that destroy traders: refusing to take a loss, holding on to losing trades hoping they'll bounce back, chasing after losses, abandoning their own systems, hesitating even when their setups are clear, overtrading after a small win, or cutting profits too early because they fear it will disappear. These aren't technical problems. They're emotional. Let me give you another example. Think of a trader named Anjali. She has a solid intraday strategy tested over months. One morning, the setup appears, but she's just had 3 losing trades this week. Her hands tremble. She doesn't enter. The trade goes exactly as planned, a clean 2% move. She's devastated, not because she lost money this time, but because she didn't trust herself. That's the kind of pain Douglas talks about, the pain that comes not from the market, but from within. And this happens to thousands of traders daily. To break free from this cycle, Douglas teaches traders to develop emotional self-awareness. He explains how your beliefs, past experiences, and even childhood conditioning can affect the way you see price action. For instance, If you grew up associating money with hard work, you might subconsciously believe that fast profits are undeserved. So what happens? You exit winners too early. Or worse, you give it all back. Not because your strategy is wrong, but because your subconscious mind is sabotaging you. Douglas emphasizes that being a disciplined trader means mastering a few key mental skills: accepting losses without guilt, following your rules with trust, thinking in terms of probabilities rather than certainties, and separating your self-worth from your trading outcomes. He says the most dangerous mistake is tying your identity to your trades, thinking that if you lose, you are a loser. But in reality, every successful trader has taken hundreds, even thousands of small losses. What separates them from the rest is that they don't take those losses personally. They treat trading like a business, not a personal battle. They don't chase revenge trades. They don't try to be right all the time. They simply follow their edge, again and again, with calm precision. Imagine how different your trading would be if you could take a loss and feel nothing. No anger, no panic, just a simple next. That's the mental space Douglas wants you to reach. A place where trading feels boring, not thrilling. A place where you follow your plan, execute your edge, and let the results play out over time. Because real traders aren't gamblers. They're risk managers. They don't try to control the market. They control themselves. And that's the message of the disciplined trader. That until you master your own emotions, thoughts, and behaviors, you will keep repeating the same mistakes, no matter how smart you are. But once you make that internal shift, once you stop fearing the market and start managing your reactions, trading becomes simpler, calmer, and even enjoyable. So if you've been struggling with inconsistency, overtrading, fear, hesitation, or self-doubt, maybe it's time to stop searching for the next indicator and start working on the most powerful tool you have, your mind. Because in the end, trading isn't about predicting the future. It's about managing the present. And once you learn to manage yourself, the profits will follow.